So, apology for a slight delay, but first of all, a warm welcome also from my side, and I'm proud to have a second presentation here today on our Defense and Security Conference. I'm happy to present you the Swiss-based Cicor Technologies. The company is with us again. It has been presenting at our previous presentations as well. We are following the stock for quite some time, and we have a buy rating on the stock. The company is generating a decent amount of revenues from the defense and security sector. I'm sure we will learn more about that from the CEO, Alexander Hagemann, who is with us today and who will have the presentation. Some housekeeping. The presentation will last for 15 to 20 minutes, followed by 10 minutes Q&A. We will record this meeting and will be available on the Research Hub later on. And you can ask your questions in the chat box on the bottom right. And without further ado, I'd like to hand over the presentation to you, Mr. Hagemann. The floor is yours.
Thank you very much. Warm welcome to all of you. So now we'll see the presentation. I think, yes, and very good. So warm welcome to all of you. Yes, there is a lot happening at Cicor, and there's a lot happening in the defense and security sector, and therefore, thanks a lot to NVB for holding this conference and doing it again. Now, very briefly, what are we doing? And you can see this here. It's our vision statement. It clearly says who we are and what we're aiming at. We are an electronics designer and manufacturer. That's very important. We're not only manufacturing electronics for major OEMs, we also design it for them. We are pan-European, and you will see that. We are not only in Switzerland, we are local in the most important economies in Europe, and we are very focused on specific markets, healthcare technology, industrial, and what we are talking about today, which is aerospace defense. Now, what you see is a company of a bit over €500 million in reported sales. Clearly the fastest growing in our industry across Europe, and also one of the most profitable ones, with EBITDA margin of last year of 12%. It marks about the top level of what can be achieved in our industry. You are seeing a very positive free cash flow last year. We have done a lot, and I'll come to that in a minute, to reduce net working capital, so free cash flow even above EBITDA for the year today, but that includes some of the acquisitions that we just closed. Now 28 production sites, a bit over 4,000 employees. And as I told you a minute ago, we are focused on those markets where our customer relationships are closest, where margins are highest, where the relationships are most sticky. That's what we look at, mission-critical electronics. That's what we do. And that you do not only find in aerospace and defense, you also find it in healthcare technology, for example, surgical robots, smart drug delivery, implants, or industrial, for example, semiconductor technology and sensors. Now, if we focus really on aerospace and defense, you see in Cicor the #1 provider of electronics to the aerospace and defense industry in Europe. It is above 200 million euros right now. It's about 28% of pro forma sales, and I'll come to that. That includes the latest acquisitions. Very diverse regionally, as you can see, covering the most important markets, UK and France. Those markets that have the largest growth still ahead of them, especially Germany, and with Switzerland and Spain, very attractive niche markets. Cicor serves about 50 of the leading defense contractors in Europe today. So really today I can say an undisputed leadership position, about 50% larger than the #2 in that sector in our market. So, and that brings with it, of course, that the references are very vast, and I'm only showing you a few. You are seeing a number of applications like countermeasures and electronic warfare, like secure networks, engine management, networks, etc. You find our applications in above sea ships, submarines, helicopters, fast jets, land vehicles. So the number of references is clearly very high. And of course, it is a result of us being the leader. We are providing a generic platform to manufacture electronic subsystems and devices Europe-wide. And that is the big differentiator that we have in the industry. Doing that, we are driving industry consolidation in Europe. If you look at the overall electronics manufacturing sector, and that's just the latest numbers fresh off the press, it's about 2,000 different companies in Europe. Cicor now, that's also the latest, including our recent acquisitions, about number 6 in that market out of these 2,000. And this is from a number 28 in 2021. So you see the very fast evolution of Cicor in that market, driven both by organic growth, and I'll come to that, and also driven by acquisitions, of course, majority today by acquisitions. We do that in a very well-defined market. The 25 billion euros is the market as of today, 2023 in this case, in the sectors that we address. So aerospace, defense, healthcare technology, industrial electronics. There you see 25 billion euros, and you see very clear growth drivers that are coming from increased outsourcing, nearshoring, and overall growth of the end markets that we serve. Now, there are a few very tangible benefits to industry consolidation. One is that customer relationships in our industry are very sticky. So what we are doing with each acquisition, we are acquiring strong customer relationships, and then as one of the major synergies, we are expanding our share of wallet with these customers and driving organic growth moving forward. We are also an industry where economies of scale are very large. I was showing you the 2,000 players in the industry today. Being number 6 also means that we are one of the largest customers for electronic components in Europe. Now, what's the end game? The end game, we expect after another 5 to 10 years, the industry in Europe will consolidate, and you will see a consolidated market with significantly increased profitability of the leading EMS players. Not only us, also the sector overall. And that is a trend that we have seen already over the past few years. Margin expansion is in a more consolidated market is what we are seeing. Now, you're seeing a number of acquisitions. This is what we have done, or the latest 2 that we have announced, all in a relatively short period of time. This is all has happened over the past 3.5 years, and it has created the position that we have today. Without going into any more detail, with the exception of the acquisitions that we have announced this year. First of all, you see our pan-European approach, seeing that we are in the major markets, as you see, UK, Germany, France, Spain. We are touching the Nordics now with our engineering center there, and Romania. Now, the acquisition of MADES, Malaga Aerospace and Defense, gives us a very prominent footprint in Spain, the largest player in the aerospace and defense sector there, with the ability to export to the US in ITAR programs, a wonderful company with an excellent team. Below that, you see a carve-out of a manufacturing site from the US company Mercury Systems. That is an interesting project because we are taking over, for a not too large amount of money, a manufacturing site, moving production to our 2 sites that we have for this project in the UK and in Switzerland, and thus creating enormous synergies for the benefit of our customer and ourselves. And the Éolane acquisition brought us a very strong presence in France, especially in sectors that we like: mission critical electronics, aerospace and defense, rail, nuclear power, That's where we are present now in France, being one of the top players in the country. Plus, we're gaining Morocco as an excellent nearshoring location, nearshoring at very competitive cost and excellent logistics, plus free trade agreements in many parts of the world. Now, if you look at Cicor after these transactions, and I'm giving you some estimate here, it's not a guidance, it's the midpoint of our guidance plus the pro forma number. So as if these businesses would have joined Cicor January 1st, 700 million euro sales, that's what you're seeing. Cicor pro forma 2025 with, as I said already, more than a quarter, and aerospace defense 28% above 200 million. That's what you're seeing, and that makes us now one of the leaders in Europe in that growing market. Now, what we are doing and what we are offering to our customers is building the most robust and the most scalable platform for defense electronics in Europe. So absolutely something that our customers love, and you can believe me that I'm having many discussions with the leading integrators in Europe, because what we provide is not only exactly what they're looking for, it is also unique in our industry. Nobody else offers that pan-European platform. Now, let's talk very briefly about financials. That's something you can read all the time. Good growth. Last year, 23% growth that we have. As you can see, organic growth overall was minus 1.6%, in a market that was still covering from inventory reductions. Market was down 14%. We were down 1.6%, so significant market share gains, which makes me very happy. We also see some losses from Forex, and M&A was the driver here. But M&A in a way that is accretive also to margins. So you see almost 30% EBITDA increase, above 30% EBIT, net profit 132% up. So that's what you see. Cicor being, again, we are very pleased with the results last year. And by 2028, as a part of our new strategy, Creating Together, it is very clear and very simple to establish the pan-European leader in our chosen markets. This is what we are aiming at, 7-10% organic growth, above 1 billion in sales, EBITDA margins pretty much unchanged from where they are now, because we already mark the top of our industry. And return on invested capital, I don't have the slide here for the sake of time, but you see very significant improvements as ROIC was really a focus we have. And you see now that we are at about 15% already, so clear value generation from that perspective too. Now, how do we want to achieve that? And let's compare the next 4 years with the last 4 years. So for the last 4 years, from 2020 to 2024, we reported 23% growth, of which above 8% was organic. Now, for the next 4 years, we are looking forward to about 20% organic growth, out of which 7 to 10 organic, 12 to 15 inorganic, and we are forecasting an appreciation of the Swiss franc against the euro of 2% per year, so continuation of the trend. Very clear, we stay true to our vision. We focus on Europe. Yes, we are also looking into the US because our customers are asking us for US presence, but the focus stays on Europe. And we clearly have a balance sheet that allows us to put roughly 150 million Swiss franc to the market to make further acquisitions when they are value accretive. Now, for this year, what do we expect? And we have not changed that, despite the massive changes in currency. We have seen a big appreciation of the Swiss franc since Liberation Day. So the new tariff regime that's coming and going. We stick with our guidance, where we are expecting a normalization of demand, which means a return to not very high, but to some levels of organic growth. Again, appreciation of the Swiss franc is included. Consolidation of acquired companies will add to the guidance. They are excluded from the guidance that we have. So we'll provide a new guidance with half-year results, where we will show the contribution from Eolan, Mades, and the Mercury projects. So our guidance 520 to 560, and EBITDA is staying at roughly 11 to 12.5%. So that's what we do. It's a story of growth. It's a story of resilience. It's a story of being very strong in our markets, and the special focus of aerospace and defense, that is not new, that we have since 3.5 years already in our acquisitions, is truly paying off. Thank you very much. These were my 15 minutes, and I'm happy to take your questions.
That has been a very comprehensive presentation. Thank you very much, Mr. Hagemann. We already received the first questions, and given the short time, I'd like to go in alphabetical order. Maybe we start with the first one. Does Cicor benefit from the increasing drone manufacturing in Europe? And considering 3 acquisitions in process, do we expect any additional news in the near term?
So about drone manufacturing, of course, we are benefiting, although that might not even be the largest market growth. I see the biggest market growth right now in electronic countermeasures, rather than that. Will there be new acquisitions? Of course, we always have an active pipeline. There's nothing to announce now, but it may happen that you are getting news. We are integrating the acquired business as well, but we're also expanding our management reach. So it could happen that there are new acquisitions.
And would it be possible to point towards one of your pillars where the acquisitions might happen? Will it be healthcare? Might it be the security and defense sector?
We are most interested really in the healthcare, technology, and aerospace defense sectors. These are the 2 where I see the biggest growth.
Great, thank you. The second question, it's regarding one of your latest announcements. Could you provide us some color on your latest announcement regarding Mercury?
Okay, about Mercury, yes. So Mercury is close to $1 billion US-based company for advanced embedded systems in aircraft of various kinds, helicopters, fast jets, search and rescue, and so on. And they have decided to outsource their European manufacturing to us, which means we are taking over one site, which we agreed and announced. We will move manufacturing to our UK and Swiss sites, and gain them as a long-term customer, where we have a commitment over the next 5 years, a cumulated commitment that they are procuring a high double-digit million euro amount of business from us.
Perfect. The next question, with regards to the pan-European growth strategy, how high will the synergies from the Eolan acquisition be? And maybe also to add, or you want to just go ahead with the first part of the question?
Yes. So there are clear synergies from that acquisition. Of course, it's in the material procurement side. It's utilization of manufacturing networks. It is the customer relationships that we can leverage more and more on a European level. It is a very strong engineering group that we have. And what we have done as part of the restructuring, we have turned a very overhead-heavy organization into a very lean organization. And that is the first way to drive margins up.
And can you give us some color on how long this will take to raise your single-digit EBITDA margin on the French activity to the Cicor level?
So at the sites we acquired from TT Electronics, it took us 6 months only. So very, value accretive acquisition that we did there. It will take longer on Eolan. It will clearly take longer. But that's maybe what we get in return for having a very, very attractive purchase price for the acquisition. I would expect roughly 18 months to bring it to the levels that we want to see.
Great, thank you very much. The next question is more like a strategic exercise. How does Cicor differentiate itself from other EMS providers in the defense sector?
First of all, that we are pan-European. We're the only one that is pan-European. That is important because sovereign manufacturing, so manufacturing in the country of demand, is mandatory in that sector. So in Germany, you manufacture for German demand, and the UK for UK demand, etc. So that is a very clear differentiation. We are present in many countries and can still offer to the customers the umbrella of a European organization. Secondly, it's scale. As I said, we are 50% bigger than the number 2 in the industry. So we are providing significant scale advantages. And we also have a very strong technological background and technological foundation from our smaller division, the AS division, Advanced Substrates, where, for example, we manufacture hybrid substrates for advanced radar systems.
Okay, so I imagine that you already answered the other question. Are by European or by American policies impacting you? So obviously, to have foot on the ground.
Yes, you always have to manufacture in the country of demand. Yes.
Yeah. Any plans to go to the US with your business here?
No immediate plans. The US has a very established market for defense products. Honestly, the US also will not see moving forward the same growth rates as Europe. Therefore, we consider our expansion in Europe to be more attractive.
Yeah, okay. The next question is just centering around the geopolitical tensions which we see currently, and to what extent this affect your defense pipeline. Have you already seen an uptick in the recent numbers, or is that something you just expect for the future?
No, we see an enormous uptick in programs that we are discussing, but the delays for them to materialize in this industry are quite long. So the actual growth, organic growth, has started, but will only accelerate in the coming year. So second half of this year, 26, 27.
Thank you very much. The next question is just a clarification. Just to be sure, the pro forma 750 million figure you just mentioned, is this including the pending MADES?
It does. So Eolan is a completed acquisition. MADES is, we are waiting for the approval of the Spanish Ministry of Defense. Mercury is a smaller acquisition in annual sales. And pro forma means it is as if all those entities would have been with Cicor from January 1. So the actual guidance for the businesses and their contribution for the rest of the year will be somewhat lower, of course.
Mm-hmm. Thank you, very precise. So the final question for the time being, do you develop any proprietary defense IP, or is it the value mainly in the integration and manufacturing?
It's the latter. It's the value is in integration and manufacturing according to the requirements of this industry. So this industry, these requirements are very specific, and it is not the IP. You know, we are the market leader. We are serving close to 50 customers in Europe in that market, and we could not develop that bandwidth of IP ourselves.
Perfect. For the time being, we have run out of questions, and that's all in time of our time schedule here. Maybe just to add one more question. Obviously, you're trying to do value accretive acquisitions, so you're locating your capital towards more M&A. But to what extent are you willing to let investors participate in form of dividends or share buyback in the future?
So far, we feel that the capital allocation is more efficient and effective for our shareholders by growing the business. You know, we are number 6 in the industry right now. The industry continues to consolidate. We will see multiple players above $1 billion in sales, and we clearly want to grow and want to continue our growth much faster, because we see that in that way we can really create value, and we feel we are not there yet at the business developing slow enough, let's say, that we would have to return, or that we should return the excess cash to our shareholders.
Thank you.
But of course, that can change in a few years' time.
Of course, yeah. Well, talking about shareholders, the last question we just received, what are the plans of your large shareholders? I'm not sure whether you can comment on that, but maybe you have some idea.
I cannot comment on that, as it's really up to them to do whatever they want. I can only say what they have done with comparable situations, which was Crayon, a software as a service company in Norway, where they have supported a buy and build approach like with Cicor. They have then, over a considerable amount of time, sold their position in a way that did not harm in any way share prices. Obviously, when One Equity Partners will start to sell part of their position, the liquidity in the market will go up, and so that should make the share even more neutral. Well, that's what they have done with Crayon, and I would not expect anything else in our case.
Perfect. Well, Mr. Hagemann, we're running out of time. Thank you very much. Very interesting to see what's happening at Cicor. Last time you were elaborating on the healthcare business, but good to see that in the defense sector you're also very active. Thanks for your time. For all participants, I've just posted in the link to our research. We have 120 Swiss francs price target on the stock. Feel free to contact our analyst, or I'm sure if you have more questions, we will also able to provide them to Mr. Hagemann. We also provided you with the link to the next meeting. This will be MilDev, which will start in a minute. Mr. Hagemann and everyone listening, thank you very much for your attention. Looking forward to see you at the next meeting.
Thank you very much for it.
Mr. Hagemann, if you want to stay here for a second, that would be great.
Perfect, we'll do that.
Thank you.